Hey, good morning, everybody. Oh, you caught me looking at the top flow of the options from yesterday. That's telling me what I'm going to likely invest and play around with today. All right. With that said, let's get into it. We're going to bring in CPI together in about 5 minutes. We'll bring CNBC on live. Understand, we are here to talk about CPI, but first, everybody likes to trade stocks a little differently. So if the market continues to rip higher, you want to be in stocks with the most demand, where you see volume, where you see inflow, and that are spiking. So I'll give you a couple of examples. Again, you want to be prepared for two cases or both case scenarios. So markets rip higher. What have we seen have strong demand? Well, obviously AI. We've seen Carnival and some other cruise companies have a strong run. Carnival had a double upgrade yesterday. I've been mentioning for probably the past 6, 7, 8 trading days multiple times. Airlines, we've seen United go from what, 46 to 51. We've seen all big tech kind of rip higher. Squeeze plays, you could say, look at what happened with Carvana. Now, let's say CPI comes in hot, right? And let's say the market doesn't like the Fed's decision tomorrow, whether they announce a 25 basis point raise at 2 p.m. or not. Let's just say that stocks decide they're going to take a bearish sentiment tomorrow after the Fed comes out with their announcement. Remember, buy the rumor, sell the news. Everybody says, okay, we're going to pivot. There's no rate hike. So everybody's pushing the market up. Now, when they actually say no rate hike, there's a chance the market takes a dip. So let's think about what stocks could go down if the market takes a dip. You look at what tech companies have run extremely hard lately, and then you say to yourself, okay, maybe there's going to be some profit taking. So let's talk about the possible outcomes over the next 2 days, because anybody that saw my post about how much the S&P 500, the SPY, is going to move within a 2-day period of the Fed's announcement. So again, we have CPI today, PPI tomorrow morning, and the Fed's announcement on 2 o'clock on Wednesday, which will likely carry over into Thursday. So from Tuesday to Thursday, let's just hit the scenarios. Okay, so the last 7 Fed decisions to raise rates have caused major movement in the market. Now, on the SPY, we've seen a minimum of 12 points, a maximum of 27 points in the larger range. So let's just say that's about 3% would be 12 points. 7% is about 27 points. So let's come up with both case scenarios. Okay, so you have your bull case scenario. We're sitting pre-market today with a SPY at 434. So let's just say bull case scenario, 3% run higher, which is on the small end of the spectrum if you're bullish, okay, going up over the next 2 days. You're going to see 447 on the SPY, 447. Let's say we see a 5% bullish move on the SPY. Do the math. From 434, you're going to see 456. And again, if we see a 7%, which would be the high end of the range, 7%, you're talking about 30 points. You're talking about 464, 465. So those are 3 of your bull case scenarios. You think the market's going to run higher. You think CPI and PPI are coming low, and the Fed will say, we're pausing right now in June, and you expect the markets to rip higher. Again, 3% would put you at 447. 5% would put you at 456 on the SPY, and 6 to 7% would put you around 465. Now let's come up with the bear case scenario. Bear case scenarios, we're still at the same point, 434, right? So markets come out, PPI, CPI, a little hot. The Fed says, okay, we're going to pause. The market says, yeah, we thought we'd like a pause. It spikes higher and then it rips lower. So let's just say 3% down in the market would put the SPY at 421. Okay, I like to say 420 because that always sounds better to me. 5% would put the SPY right back at $412. Now let's remember, we spent 3 full weeks ranging right between 408 and 414. So I wouldn't be surprised to see that at all. Again, that would be your 5% range. Let's go to a 7% range. Then you're going to be back right at 400, 401, 402. So again, the possibilities are endless. I give you 3 possibilities for your bull case scenario: 3% run, 5% run, 7% run. The same on the reverse side, because we always prepare two scenarios. Just because we think scenario 1 will play out or scenario 2 will play out, we have to know what the opposite position might lead to, because remember, market makers, institutions, analysts that come out with price targets, they're here to make money, which making money means they have to take money from the market. Taking money from the market means they're trying to take your money. So understand, when these analysts come out with price target increases, decreases, they already have positions in whatever stock or underlying derivative. They sold their puts, they bought their calls, they bought their stocks, and then they make the announcement that the price targets increase.
On the CPI headline, since it peaked in June of last year at 9.1%, it's come down every month for 10 consecutive months. Will this be the 11th? No other sector in the CPI series can say that since its high watermark, and we're only a couple seconds away. We're going into this with a 368 yield on 10s, and the data starting to hit the wire. Rates are moving up already, so somebody seems to have this number before I'm seeing it on the wire services. We're now up to 372, 373, up 0.1% on CPI headline, exactly as expected, up 0.4. If you look at core, stripping out food and energy, that's exactly as expected as well. Year over year, 4%. Year over year, 4%. We're expecting 4.1. Our last look was 4.9. So indeed, this continues that streak. This is the 11th consecutive month since 9.1% in June of last year, which was the highest level since 81. Each successive month has been lower. And if we look at core, which many believe is the most important, 5.3%. 5.3, we're expecting 5.2, so it's 1/10 higher, but it's 2/10 lower than the rear view mirror, which is 5.5. This series peaked in September of last year, Becky, at 6.6. That was a 40-year high. However, we did have the month of March, which moved from 5.5 up to 5.6, so it hasn't been continuous. This is lower. We do see that interest rates have been moving around quite a bit. We're now right back to this 368, 369 level. And if you're looking at intraday 10, we've had a lot of little noise volatility here. But if I had to summarize, as I think the market is now, it's definitely a bit better than expected. These are still sticky numbers year over year, but we are making progress. We see that the pre-opening equities are a bit higher than they were before this number. We're up about 40 points in the pre-opening Dow futures. Becky and the panel, back to you.
Okay, Rick, stay right there. We'll get back to you in just a moment. Steve Leisman joins us right now with his reaction to the numbers. Steve, what do you think?
I'm still concerned about this core number, which is still 5.3. It's the source of the Fed's concern. And I think the market is trading in a logical way. What I'm seeing is a firming up in the sense of a pause this month, but a increasing bet on, and I'll just double check that while I'm talking, because sometimes there's a lot of volatility right around the number. Yeah, an increasing bet, I would say, on the idea of a hike in July, which is now at 68%, or 66%, I guess is the way to put it. And we're not getting the help from housing. It was unchanged at 0.5%. One of the expectations of those who think inflation is going to fall is the idea that housing inflation will cool off. I haven't had a chance to see many of the other details in there. You did get a negative number on real earnings. That will be something of a drag on the economy. And then when I look at some of the other data here, it looks about, I'd say, a good enough, you can tell whatever story you want out of it in terms of, I'm not saying it's a dovish number or a hawkish number, pretty much as expected,
but Steve,
a little bit hotter.
You see the NASDAQ doubled. That's interest rate sensitive. Gold immediately moved. Dollar immediately moved. Mm-hmm. Bitcoin immediately moved. Mm-hmm. I don't know. July's a long way off. I hear you. But they're going to have a lot of. If they do skip, then they're going to have time to think. And we saw how much this last one moved around. 68. I wouldn't put any money on 68. Maybe it's 80. Maybe it goes up with the number, but. July's a long way off, and the knee jerk was in the dollar, gold, and the NASDAQ.
Sure. I mean, well, look, you got another chance, Joe, for the inflation numbers to come down before the July meeting. Maybe we'll get a little more cooperation from housing, maybe a little bit better numbers in terms of declines in those core services thing that the Fed chair is looking at. But look, You're still at 5.3. You're still above 5% on that area that Powell is looking at. So I think he's not going to feel like job is done unless you get a better number in July.
Right. And these all these, the NASDAQ, gold, everything could reverse by the end of the session. But just the knee-jerk thing was that it certainly wasn't off the charts worse than.
Okay. Let's kill that off. Okay, so basically CPI came in line with expectations, 4%, which was the median was actually 4.1, so it's a little light. JP Morgan thought 4.2 year over year, 5.3 core. Again, as Steve said, it's kind of high. Jay Powell is definitely, in my opinion, going to push for 25 basis points come the July meeting. The June meeting, they've already said pause. The market has it baked in pause. That's why the market's been ripping higher. Now, interesting fact, I was talking to some of my buddies on Wall Street, and they were telling me that the market has everything perfectly priced in for a perfect outcome, a soft landing, a continued economic recovery. So if everything's priced in and the market is keep pushing higher as it is, I'm just suggesting concern. Again, right before we went live, I mentioned your potential movements in the market over the next 2 days, because every Fed meeting for the past 7 meetings has moved the market anywhere from 12 points all the way up to 27 points. So if you break it down, you're talking about anywhere from a 3% move all the way up to a 6% move. So when you look at the SPY sitting at 434 pre-market, again, a 3% move higher over our next 2-day period would put you at 447, 5%, 456, 7%, 465. So when you're saying, oh, SPY calls, 450 calls, geez, those are so ridiculously cheap. I'll buy some for Friday. I'm a bull. Or you could say something like, I'm a bear. You know what? This number is a buy the rumor. So we know that there's not going to be a rate hike for June. There might be one for July. Numbers came in as expected. Buy the rumor. Market's been pushing up into all of these numbers. Sell the news. When the news finally comes out and the Fed comes out tomorrow and says, no 25 point rate hike, maybe the market throws up. Again, I'm not a market maker. So what do we see going on this morning? Let's just talk about some other scenarios of different stocks and how things can play out today. Let's just go and pull up some data real quick. Okay, we had a downgrade from Apple, from UBS. Understand, downgrades, upgrades, these are the analysts' way to take advantage of stock pricing. Kathy yesterday sold 400,000 shares of Tesla and bought like 180,000 shares of Meta. I know a lot of people like to follow that move. This is interesting. We've been talking about this for now a week straight. Demand for calls has reached a 14th month high. So why could the demand for calls go up? I'm going to give you a scenario real quick. I'm an institution. I'm a hedge fund. I'm in stock. I'm in NVIDIA. I'm in AMD, whatever it is. I've been riding the wave up. I've been in Meta, let's say. Here's a way that institutions protect themselves and still have more upside potential. They take their profit, they sell their stock. They just profited 126% on Meta. So they sell their Meta stock. It doesn't mean they're clearing out their Meta position. They sell the stock, but they still want that potential upside if the market continues to run. So what do? They enter into call options, which allow them to profit and which puts their risk minimally because they're only putting in a certain amount of money to buy those options going forward. Next, I'm sorry if you like Airbnb. Jim Cramer actually said Airbnb's second quarter was pretty strong, so that's probably going to crush that company. Tesla shares. After their 5-day run, I mentioned 5 straight days. After 7 straight up days, I mentioned that. Now Tesla shares are higher for 12 straight sessions. It's the longest streak on record, meaning Tesla has run 12 straight positive days. That's the longest streak on record. You guys are like, no, Tesla runs so good. Yeah, Tesla ran really well in 2020 and had, crazy percentage gains, but they didn't run more than 12 straight sessions. Ties it? No, it's their longest streak. Okay, here's an interesting thing. And for some of you who haven't seen my video on YouTube, how I used to manipulate stocks, this came out yesterday. Breaking news. The SEC has charged an investment advisor with naked short selling scheme. Okay, Ponzi scheme, making millions illegally. They use their naked short selling to artificially deflate or push the price down of a security, allowing them to obtain more shares at a cheaper price. Okay, They repeatedly circumvented trading rules to conduct unlawful trades in the stock market of at least 10 public companies. So when I mentioned that there's market manipulation, you got to watch that video that I dropped probably 2 years ago on how I used to manipulate stocks when I worked on Wall Street, when I worked for these hedge funds and a couple of these institutions. Options activity is pointing towards the 432 level. We saw that yesterday. I was actually expecting the SPY to possibly reject 4032 because there was a huge supply zone. However, we broke right past that. I guess no one was willing to step in and sell before we saw the numbers come out for today because, again, I mentioned the bull case scenario, 3 to 5%. You could see the SPY crossing over 450, 456 if you get 5%. Understand, if you still want to be a bear in this market, you can factor in the other way as possible. And you can say, okay, SPY 412. Again, it's a 2-day process. You've got Tuesday, Wednesday's announcement, PPI, Fed's announcement, and then you have Thursday. I was looking at the biggest flows for Apple. I entered into a couple Apple puts. Apple got a downgrade from UBS after hours. The downgrade was they were increasing their price target from 180 to 190, but the stock was downgraded from a buy to a hold or something to that extent. Again, Apple lost maybe a little over 1%. So I'll be green on those. However, I was hoping Apple would fall more. I saw a report yesterday, breaking news. The U.S. government is preparing to evacuate plans for American citizens living in Taiwan. 3 sources told the Messenger, a news reporting agency. So that's pretty serious. If China actually goes on the aggression, that's not going to be good for world news. Interest payments on U.S. debt is at a record high of over $928 billion. At this rate, it's likely going to be the largest item on the federal budget. So when you break down the federal budget, defense spending here, taxes, IRS, whatever, food stamps, Social Security, the largest ticket item on the government's federal budget is going to be interest payments, money that we're paying to cover debt. It just doesn't make sense to me. Here are the ranges. Again, some of you haven't seen this post. I'll just leave it up there for a second. Again, a 2-day period, we saw the low end of the SPY, 385 to 407, $22 range, right? September, $26 range, $22 range. So when I'm telling you the movement could be anywhere from $12 to $26, which would be 3% all the way up to like 6%, prepare yourself. Do the math yourself. With the SPY sitting at 434, you take 3%, you're like, okay, that's like what, a 13.5 point move. So 3% to the upside, 447, 3% to the downside, you could be like 420. Okay. So yes, if the markets turn bearish, I'm telling you by Thursday, let's say 3 p.m., markets turn bearish, you're going to see 420. Okay. Markets turn bullish by Thursday, 3:20 p.m., you're going to see 447. I do not think we're going to be range trading in the 432, 440, 434 range. So just prepare yourself for whatever you want. Again, if you're looking for bullish sentiment, you want to find stocks that could push higher. You want to find stocks that perhaps may be squeezing. You might want to look at a Carvana, a NEO. Chinese stocks took off overnight. I don't trust China still, so I'm staying away from the Baidu and the Alibabas. I'd rather be in domestic stocks. Again, we spoke about Carnival Cruise Lines, double upgrade yesterday. I've been speaking about airlines for 10 days. With the information that came out this morning, we're likely to see gold and silver and other metals spikes. So what would you look at? I might look at U.S. Steel. I might look at Fremont, FCX. FCX is up 3% this morning. We were trading that all last week. Let's see what else we got. Okay, 3 trades yesterday. Anybody that joined me yesterday morning, I mentioned your bull case scenario, your bull trade was Zoom. There was $3.2 million worth of premiums late Friday, so I expected Zoom to push higher. So one of my first trades yesterday, Zoom was at what, $67. I bought it at $67. It went up a whole $1.50, and I'm like, okay, I'm out, right? 68. I think I was out at 68.16, something like that. Where did Zoom go to? $70. Where's Zoom this morning? $70. What did I tell Discord? Well, I mean, there's obviously people that bought the call options with Zoom. They went out to July 21st. So me, I was just looking for a simple trade, stress-free. Remember the 3 S's? stress-free, safety, and secure profit. If I wanted to get greedy, I still would have been holding my Zoom, and I'd still hold my Zoom past the 70, back to 69.50, and back at 70, looking for it again. They were buying the 70, 75, and 80 calls. So they're really looking for the NASDAQ to continue to push higher. Again, it's tough for me because I'm still a little more bearish. I still think the market's a little too frothy. If I was a little more naive and I just played the trends, sometimes I wish I was like that, because it's so much easier to say, man, these stocks, all they do is go up. Holy shit. Airlines just go up. Tesla just goes up. Let's bring up Tesla was the other option that I mentioned yesterday. I'm actually looking for a pullback potentially on Tesla. What I'm looking at is on the deltas. Once the deltas for Tesla turn positive, Tesla generally goes down. Now, for the longest time, for the past, 12, 13 sessions, the deltas for Tesla have been negative, which means Tesla stock has room to run higher. Okay, so that's pretty interesting. Yeah, thanks, Ellie, for please thumbs up if you like what I do here. Yeah, here's the information on Tesla. And again, we took that from TradyTix, who supports, our platform and provides the algos and the flows. Speaking of algos and flows, that's what you guys caught me looking at right before we started. What is this? This is the top flow. So the top flow means the top bullish and bearish flows, option related to the market. So I want to see what they were trading yesterday. So we know Tesla, the Qs, technology, right? AMD, of course, you're going to find NVIDIA there. You're going to find Meta, Apple. I don't know what TRUP is. I don't know what XME is. So I might look at those. Avgo, it's another AI play. It's another, chip play. Okay, let's talk about the chip sector real quick before I get into the negative flows. The chip sector. So we hear that there's possibly an IPO by SoftBank in our markets, right? And SoftBank, all they're synonymous for is losing money. They're the ones that invested a shit ton of money into WeWork before they were taken. So Intel has approached SoftBank and said they would like to be one of the initial investors into SoftBank. So SoftBank's putting together a fund for, let's say, $15 billion. So let's say Intel puts in a little, SoftBank loses money. I mean, I just think it's a terrible idea, a terrible decision for Intel. So once Intel is finished with its pop, once I see, Intel start to slow down and there starts to be some selling, I don't know if it's at $34, $35, $36, $38. I don't see Intel going to $40. I'll tell you that much. In fact, a lot of people were telling me Intel was going to be single digits before this whole AI run. So my point is, on my list, I use a piece of paper. I can't even show you right now. It's stuck to the wall. But I use a piece of paper as a reminder. Hey, when Intel stops running, you want to look at puts. So that's just something that I look at. Again, Jamie Dimon came out 2 days ago, and he said he expects the Fed's funds rate to be at 7% sometime later this year. The market has the Fed's funds rate going to be at 4.25%. So there's a major disconnect. You're talking about 300 basis points. So whereas we're talking about the Fed raising rates 25 basis points in June or July, we're talking about a discrepancy between Jamie Dimon, the head of JP Morgan Chase. He believes the Fed funds rate could hit as high as 7%. And the market is telling you the Fed funds rate by the end of the year will be 4.25%. Major disconnect. Expectations previous month, we did that already. Here was the flow that came in again that I mentioned yesterday on Zoom, the inflow flow that came in on Friday, which is why I got into Zoom. But I'm out on secured profit. In retrospect, I should have held on to that one. The other play I made yesterday, I was in Tesla puts at 149. It went down to 147. I sold. I took profit. I think it actually went to 145. So again, I left some money on the table there. I got into an Affirm put as well because it was spiking. As it was spiking, it went up. I was down 20%. Then it dropped. I was up 30%. So again, depending on your entry level, you want to secure profit where your comfort zone is. If you can deal with all the stress and you have a game plan to hold for a number of days, great. If you're a day trader or a swing trader like myself and you want to be in and out and you're out of the market and planning most of the time and you're in a trade for 10 or 15 minutes, which is the longevity of my trades are usually anywhere from 15 to 28 minutes because within the first 15 minutes, you're said to make a majority of your profit. So people hold on to trades way too long. Not me, I've learned. With that said, we've hit a good timetable. Please join me tomorrow morning for PPI. And again, we'll talk about the Fed's announcement coming in at 2 p.m. yesterday. Heading over to Discord, Going to do a pre-market video, tell you exactly what I'm looking at, and hopefully we can all make some money today. See you guys later. Thanks for joining me.